Hey everyone, welcome to the video on Ethereum. It's been quite a while since I've done any kind of an analysis on Ethereum, so I will go ahead and get started on this. Of course, the usual. This isn't financial advice. I'm not your financial advisor as much as I'd love to be, but I'm not. And you're responsible for your own trades. Preserve your capital appropriately, and do your own research. And I'm here to just give my opinion on the market here. So let's just take a look here for a moment at Ethereum. I want to focus on a couple different things since we had the big Bitcoin run a few days back. Um, the first thing that I want to do is I want to focus on like when that happened, right? So when Bitcoin went to a new low, and I'm gonna zoom in here. I'm on a 4-hour chart. When Bitcoin went to a new low, Ethereum didn't. It did not happen to Ethereum, right? So back here on October 23rd, October 24th, Ethereum didn't break this previous low. So this pivot here above $150, I believe, is pretty significant, and we really need to pay attention to this level. Also, focusing a bit here at this level about 165, this is also pretty important. So this entire range down here is where I believe most of the liquidity is for Ethereum. And also, as far as trading ranges go, I believe that this level right here at about $190 to $200, I believe this is going to be pretty significant resistance to get through. Now, once we're able to push through this, I think that we've got, green pastures ahead. I think that we've got serious bullish potential if we're able to get above this red box. So, I mean, right now the range isn't all that great. We're really just talking about a $40 range, right? We're talking about $150, $160 up to like $190, $200. Right, so a couple days ago, so this is about 5 days ago when we had the run up, we stopped at $200. We stopped dead in its tracks right at $200, right? So it got up to 199.75, and then we pulled down. We pulled down here to about 173.50, and then we're moving up again. All right, so let's take a look at this from an equilibrium standpoint, and let's just see what this trading range potentially looks like. So I'm going to use my channel here, my parallel channel. I'm going to start up here at $200. I'm going to work my way over here. Let's see if this allows me to do that. Okay, and then we're going to pull all the way down here to the bottom. All right, so we've got our equilibrium set right here at about $175. And actually what I might do is I might actually pull this back a little bit more and just to pull that all the way back there. Okay, so this equilibrium does appear to be pretty important. So let's just take a look at it, right? So we have our push down here to equilibrium at 170. Actually, it's about $176. We pulled down. We had some accumulation. We eventually did push up after we reclaimed this equilibrium as support. And then we rolled right through it, and then we had more consolidation, and we can see the chart here. So basically, there is accumulation, distribution, it's just reaccumulation happening in this zone. So, in my opinion, buying down here at about the 150 level, 150 to 153 is a pretty good bet because you have your limited risk down here. You can cut your losses at like maybe 148 or 149. You can cut losses with minimal risk. Right, buying up here at about $180 is well and good. At this equilibrium though, just shy of it, and especially looking at recent trading activity, right? If you're able to get an entry around this equilibrium, I would stop loss about 173.50, 172, 173, that area. I would set a stop loss in this area so that you can reaccumulate back down here if it goes that low. A lot of this is going to depend on how Bitcoin reacts. I do think that Bitcoin has the potential to go back down to about 8,700, 8,800, which would probably freak a lot of people out, but that's where I would be looking to rebuy. And again, here on Ethereum, and we did this on Holochain on a video just a moment ago, going down here for an AB, if we're going to go down here for a C, that's going to pull right back down here to about 177, which would be where I would be looking to maybe to get some longs here at 177. Stop loss right here at equilibrium about 175.50 or 176, whatever you're more comfortable with. Because if it falls below this, it's probably going to come back down here to about 167. So down here at the height or at the top of this liquidity pool, this is where the next area of support would likely be. And you can see on the way down, this is where support was as we were moving down. Um, we had support in this zone, so I would expect that to be support if we're able to come back down here. Chances are pretty good we're going to come back down here to the 177 area, and that's where I'd be looking for those longs, again with a tight stop loss, because with any trade setup you have to be able to acknowledge where your trade setup is invalidated, and in this case if we're looking to buy here, we would stop loss on the other side of this equilibrium, which this is a high confluence area in this zone, and if we push beyond this equilibrium for more than an hour, I would say cut losses and look for a re-entry down here. I'm not sure that I would be looking to short or to flip your position from a long to a short if we're able to push beyond this, but I would be looking to re-enter that position down further. So that's kind of my thoughts on this. I figured I would keep this short and sweet just because there's a lot of uncertainty, and this is likely going to be doing this for a couple days between this equilibrium and this distribution zone. So I would be looking just to be accumulating in this area on spot positions. And as far as leverage plays go, make sure you keep that tight stop loss, use low leverage just to manage your capital and manage your risk appropriately. So yeah, again, if you have any questions, feel free to pop in the Discord, leave a comment if you'd like an invite. It doesn't cost anything for you to join. It's just a good community of good people. So otherwise, I will catch you all later. Have a